Content in this video is the next in our 10-part limited video series about trading techniques and tactics available through the Market Manifest, which you can access at peterleeds.com. Nothing in this video is intended as personalized trading advice for you. We're suffering a three-stage economic knockout right now. Between the inflation, which is rising in a slowing economy, but now the inflation is coming down, as you knew because you watched this channel. It's going to come down pretty quickly from this point now too. But a weak economy suffering inflation slowed down even more. And then now we have all the layoffs coming. We're going to talk about all of this in this video too. Lots of layoffs going on right now. The layoffs is what you do to try and get your train back on the rails if you're having corporate problems. The first thing you do is you look to lay off people. And what's the next stage? Bankruptcies. This is a problem here, where they dropped rates to near zero for so long. What that did, that distance, that duration, that entire time, it was just driving the debts of individuals, of corporations, of the government. More millionaires were created in the Great Depression than any other time in history. This video is about 5 big economic events that are going to happen in 2023. It's good to be early, as you guys know, especially when you have to act on some of these things. And I've been talking about a few of these for a while now, and it's all happening now. Here's the 5 big events in 2023 that you need to know about and react to. And the economy is breaking down. That's what this channel is about. I'm trying to help you guys know what to do, how to react to this crumbling economy. Gold is looking pretty lively today. Last I checked, it was up $54 per ounce. And of course, silver, rhodium, platinum, palladium, they're all going up together. And expect more and more of this going forward. So what is all this information telling you? It's basically giving you a story of the year that was, and also what to expect going forward, what the trends are showing you. And what is the story that it's telling you? It's telling you that 2022 was a heavy year, it was a pivotal year, and let's all look forward to a better 2023.
I think I was wrong then. There have been unanticipated and large shocks to the economy that have affected our economy badly that I at the time didn't fully understand.
This video is inspired by the following testimonial. Peter, when one comes to Peter Leeds, you always get the truth. You always give your audience 110%. Thanks, that's from Jeff B. Inflation and prices starts to decline faster, pick up steam faster, which will be exacerbated by any kind of recession we roll into because people will spend less money. Then you're going to see inflation coming down more meaningfully. You can see the chart of the U.S. Consumer Price Index year over year. It was up 7.1% from a year ago, but it's still declining. But if you X out food and energy, that's only 6%. So prices rose less than expected in November. Here's the one chart I always show you, with a new edition now. But you can see, this is what I always show you. 9.1, 8.5, 8.3. It just continues to decline. And as you would know because you watch this channel, unemployment will rise pretty significantly. If you want to look back a year over year, the planned layoffs is actually 417% greater than a year ago. But what happens when you have way too much debt and interest rates increase? The only way the US government can get out of this debt bomb that they've set up is to inflate away the money, make the money basically worthless, so it makes the debt easier to pay off. Or, as I'm always telling you, they'll default on the debt. They'll have money they owe to other countries, to American citizens, that will not get paid. And the way it's going to play out is with a lot of these pension crises. You're seeing what happened in the United Kingdom. Australia's got some problems. America will be one of the next shoes to drop. There's not enough money in the pensions for what people are expecting to receive. Some estimates are putting the pensions at only 70% funded, and depending on which pension you're talking about, it can be a lot lower. A lot of these pensions are already breaking apart. Job cuts in November were 76,835, and most of that came from the technology sector. Well, yeah, but all sectors have layoffs. And I ask you, do you think we're going into a recession? A lot of companies, especially the tech companies, which have lower earnings expectations going forward, are starting to say, wait a minute, we're way over our skis, we're way over to one side of the raft too far, and to correct this, to save the company, keep making more money, we need to lay off not just 5% of the workforce, not 3%. A lot of them are laying off 10, 20, 30, 40% of their workforces because they're so far over to one side, which they didn't realize when all this easy money was sloshing around everywhere. So all of these interest rate increases will have their effects down the road. The earliest ones are starting to have an effect now, but the more that they increase them to higher levels, the more time that goes by, the more strain there will be on the economy from the interest rate increases, and that's when you're going to start to see a lot of the bankruptcies and a lot of the increases in unemployment rates. Underneath all these increased interest rates, you're paying a lot more for a mortgage, and people are going to start seeing this. They've been seeing it now, but they're not feeling it yet. As people feel this, you're going to see a massive acceleration in the number of people who are trying to get out of their house or who know they can't afford their house, who are willing to lower their asking price instead of holding to the line. The trade deficit is almost always significantly negative, and it's been getting bigger and bigger the more that we don't have a lot of manufacturing on our soil and when we get a lot of work farmed out to other countries. But here's a chart of real consumer spending. People are spending a lot less right now. This is when everyone bought all those Peloton bikes. Here's business confidence. Add that with the consumer spending, and you get the feel of the direction we're going, which I've been trying to explain to you guys for a long time now. Real estate has begun to come down, as I explained ages ago that it would, and now it's going to accelerate markedly, especially going into 2023. 2023 is setting up to be a very difficult year, more difficult for people who don't prepare properly, as I'm trying to explain to you how to do. The economy is breaking down. That's your opportunity, because while everyone else is watching it happen around them and they're taking the financial hit from it, that's when you can take advantage of a lot of these opportunities and options that I'm telling you about. And now the effects of the interest rate increases are going to put a lot of strain, especially on the zombie companies, which are all over America right now. About 300 of them are listed on the stock market, publicly traded. And there's a ton of absolute zombie companies among small business, which are not necessarily so transparent. You might not even hear about them when they come and go. They go out of business. But look at Brazil and then look at Argentina. Basically, this rate indicates the complete collapse of an economy. You're just part of the trend or part of the crowd that's rushing from one side of the raft to the other. So a lot of times what I'm trying to say here is that what you think is a smart way to invest, a safe way to invest, actually can backfire very significantly and very often does, especially if you're part of the crowd. There's a lot of defaults brewing up. There's a lot of bankruptcies. This number will increase because it's just now having the effects from the increased interest rates, which the Federal Reserve did to try and punish the economy. Put it all together and you can see that this is not a healthy economy. It's going the wrong way. Bankruptcies are going to increase. And this is all before we see any kind of problems in the real estate market, any significant, serious, widely followed, known big problems in the real estate market. Going into 2023, there will be significant layoffs. There will be a lot of pressure pushing the unemployment rate higher. This is Bitcoin. It's up 4% today, but it's down 63% year over year. But you can see that a lot of these cryptos are down big time. Solana is down 91%. But here, if you go down to the bottom, Terra is down 100%. Get used to that if you own one of the altcoins. Now, real estate. As I told you well ahead of time, it was maxing out, it's going to come down, and now it's all playing out. Where are we seeing home prices declining? Just about everywhere, and it will get worse. It'll be like a snowball rolling down a hill causing an avalanche. I believe in 2023, the big 5 events are going to be the gold and precious metals of all kinds soar much higher, including the mining stocks that are high quality companies. Unemployment is going to climb much higher, and everything that means for the businesses in the economy and for the people working in those businesses. Inflation will continue to decline, and I'll say for a time until it flips. Once the Fed pivots and stops increasing rates and starts lowering them, inflation is going to spike strongly. And that's going to happen after the 2023 recession. Or during the 2023 recession, when people are feeling a lot of pain and it's obvious then the Fed will say, we're going to start lowering interest rates. What happens is when people start to see other homes declining in price, they react in a lot of ways. Maybe they lower their own asking prices. Maybe they don't overbid on a house. They don't feel fear of missing out. They're not being as aggressive.